to the last class of the night. My name is David Aramaki. I am a financial advisor with Ameriprise. I've been doing this about 24 years. I don't know, I speak to about 20 to 25 high schools every year doing this presentation on various financial aid nights and college days and things like that. I've gone through a lot of learnings. This is a picture of my two kids. My daughter's got a couple more months at Santa Clara University down in California, and my son is a sophomore at University of San Diego. And if you have already started looking at schools, you know how expensive they are, right? These two schools probably start out at something like $70,000 a year, as the sticker price, as some people call it. And I said, hey, good luck, kids. I hope you get in, and I hope we get financial aid and scholarships and everything, and we'll see what happens. And when all was said and done, the cost of these schools came out to be less than if they'd gone to the University of Washington here. And so it all worked out great. And so what's my point? A couple things. The first one is nobody knows how much any school is going to cost your family as we're sitting in here today, right? So many things have to happen. First of all, you have to get into the school for cost to be an issue. And then finally, once you get back, maybe financial aid or scholarships or what have you, then you can actually see the bottom line cost of that school to your family. And, if that's too expensive, then sometimes life is like that, right? It's just too expensive. So the second thing is, it sounds crazy but it's almost kind of like a leap of faith in a way that, hey, let's do the best we can, put our best foot forward, both to get into the school and then hopefully we get some kind of financial assistance if that's what we need to attend that college as well. So what I'm going to go through tonight is the financial aid system, kind of how it works, how it doesn't, a little bit about maybe for some families that don't qualify for financial aid, things that might be helpful for them, how you get it, common mistakes, maybe if those pop into my mind as we go through this, and then we'll wrap it up and we'll be done with school today. Okay, so how does financial aid work? Financial aid is a system that our government has developed. It asks you a bunch of questions, and at the bottom pops this magical number called your EFC. And it's kind of, hey, compared to everybody else in America that's filling out this financial aid form, this is what we think you can afford to pay. Now, it doesn't mean that's what you're going to pay. What ends up happening is all of this data gets sent to the colleges that you ask them to send it to, and then it just sits there. And if your kid gets into that school, then they look at this data, and depending on that school's financial aid priorities that year, maybe it's first-gen students, maybe it's low-income students, maybe it's, oh, you know what, we're going to try and be as fair as we can across the board. These are all things that you don't have control over. And so I say that as kind of a point that trying to anticipate what school is going to give you the best financial aid versus another school is a very difficult and probably impossible game to play. So I'll throw that out there. Okay, a lot of times when people see systems like a financial aid system, they just think of, oh, how much money do we make? Do we make more or less than this money? Yes or no, we get help, or we don't get help, And financial aid system is very different than that. While family income is a big driver in how this works, it's not the be all end all. I've run into families that make $40,000 a year, not qualify for financial aid, and I run into families that make $240,000 a year, still qualify for financial aid. And so the system isn't broken by any means. If you look at this formula down here at the bottom, a lot of the way that financial aid works is simply based on the cost of attendance of the school itself, right? You might not be a financial aid candidate at UW, knowing how much that costs. But if you look at something like a Stanford at $75,000, you could be a great financial aid candidate, even though you haven't done anything different in your life, right? It's simply just based on the school cost itself. And so sometimes if you're hanging out with parents and you hear a parent say that they got financial aid and you're kind of wondering how that's even possible, Maybe it was just because of the cost of the school itself. Okay, the system itself is pretty simple. Everything kind of funnels into two different categories. It's either looked at in the calculation and assessed somehow, like investments, things like that. And hey, the more that you have, the more that you can kind of afford to spend on school, right? Or it's not looked at all. These are things that are invisible inside of the system. And so, I think there's no such thing as a perfect system, right? But obviously, I think the system is really good. I think it tries to make us do the things with our money that we're supposed to do. If you have done a good job building up home equity, maybe even paid off your mortgage, we're not going to penalize you in here. If you've done a good job saving up for retirement plans, your 401ks and IRAs, you're not going to get penalized. You don't have to sell your house to send your kid to college. They're simply just not looked at inside of the formula. They don't ask you, hey, how much money do you have at the end of the month, right? To somehow charge you more for college. They don't. It's very, I think it goes with how we're supposed to be running our own personal finances. And so if you ever talk to somebody and they have this big elaborate 10-step plan on how to qualify for financial aid, and you have to do all these crazy things with your money that you've never heard of before, chances are that's not how the system works, right? And so kind of keep that in mind. One of the things that is important inside of the formula is who is the legal owner of the assets. And so let's say you've got the daughter, dependent student, which I'm guessing all of your kids will be, and then dad. Let's say we're just looking at these two $10,000 accounts. As a dependent student, the assessment rate on that is 20%. It's the highest assessment on assets inside of the formula. And so $2,000, right, falls into the family's expected contribution. Parents, on the other hand, a lot of their assets get ignored, but at worst, only 5.6% of the total. So that $10,000 at worst is only going to get hit at $560, right? And that's a difference of $1,500 in financial aid. Just talking about this $10,000 account alone. Just quick note, if you have things like the GET plan or the 529 plan, savings plan for college, those are considered assets of the parent, right? Because, hey, the parent controls it, they own it, they don't have to spend it on the kid, even though the kid's name is on the statement. Those are considered parent assets. Okay, so very hypothetically, let's say this is maybe what it looks like. Your kid is looking at two different schools, one public and private, and that, sticker cost on them is $20,000 and $40,000. And let's say your family's EFC, after you've done the financial aid form, is about $10,000. That means the financial aid that the public school might put together for you, give or take $10,000, and the private school maybe $30,000. And this is great news, right? Yes, this is great news, because if this is your situation in this example and your EFC is 10, it might not matter which school your kid attends, because the out-of-pocket cost for you might be the same, around $10,000, give or take. Financial aid is kind of the great equalizer. I don't want people to think that private colleges are simply just filled up with rich students. That's not how this educational system works. And in fact, I saw a study a few years ago that looked at the income levels, various income levels for public universities, as are reported, and then at private universities, and they were almost identical as far as the different levels of family income at all of these schools. So, how does that work? It's because of financial aid. Okay, so what does the financial aid look at? It looks at your core household. Okay, so if mom and dad are still married, yes, they're in on it. Kids in on it. Income and assets, meaning the tax return, and then your assets. If mom and dad are divorced, then they want to know, well, which parent did the kid live with the most in the last 12 months? And that is their definition of custodial parent. So it's different than maybe what the divorce decree says. It's different than who claims them on the tax return, completely irrelevant for financial aid. And so if mom is remarried, then mom and stepdad are included on the financial aid form because they're considered in that core household and custodial parents. Okay, so let me give you my favorite bad example of how money can work very inefficiently. Because I see a lot of situations where parents or families are getting help from the outside of the core household, like grandma and grandpa. So here's my bad example. When my daughter was born, my grandma used to give her these things called EE savings bonds, and it might say $100 on the front, and that means that grandma spent $50 on it, and then in about 14 years, it went up to $100. So what does that bond look like, just as we go through the financial aid process, right? So it's in my daughter's name. So it's a dependent student asset. So if you remember back to that slide, 20% assessment. So that's $20. Maybe we lost $20 in financial aid because of that. She has to cash the bond in. She gets $100 for it. But $50 of that is income or interest income that is accumulated, right? And if you can picture what a tax return looks like, that interest income goes down to adjusted gross income. And as a dependent student, that number can get assessed as high as 50%. So let's just take worst case scenario for this example. Let's say we lose another $25 of possible financial aid. And then she has to pay taxes on that interest still. And let's say she's in the 10% bracket. So that's another $5 out the door to the IRS. And if you're keeping track of all of this, what did we net out of that? $50. When all said and done, and it's not an efficient way of, obviously using money. So, what could grandma have done differently in that example? Maybe what grandma could do is she could gift it to the parents instead of gifting it to the kid, right? One of the other things that somebody outside your family can do is they could just write checks directly to the school itself. That is not financially friendly either, but if you have a grandma out there that wants to help you out with a lot of money, then that's certainly an easy way to do it, right? It's not limited to the $15,000 per year per person gifting rule that we have. So depending on what your situation looks like, gifted money has only 3 places to land. It either goes to the school, it goes to the parent, or it goes to the kid. And depending on what your situation looks like, one of those is going to be better than the other 2. More efficient, let's use that word, more efficient than the other 2. A few years ago, the IRS came out and said, hey, you could take money out of retirement plans like IRAs and 401ks, and you're not going to be penalized if you use it for college. Okay. One of the things they didn't go into much detail with is that, you're not penalized on it, but you still have to pay taxes on it. And it's still a tax line item. And it goes on the front page of the 1040 as a distribution, and goes all the way down to adjusted gross income, and it increases that number. Okay. And so because you have to fill out this financial aid form every year, what happens if you do that? You are tricking the formula in a very bad way into saying, hey, look how much money we made this year. Well, you didn't actually make more money. You just took it out of an account that made it look like you made more money. So these are the things that you're trying to avoid in the financial aid world, right? Tricking the formula so that it hurts you later on, right? So understand how different things you're doing with your money shows up on the tax return, and then also then on the FAFSA. Another reason why that's important is because these tax credits that are out there for when you guys actually start writing checks for college, you qualify for them based on adjusted gross income. And so like the American Opportunity Tax Credit, the way that it works is that if you spend $4,000 on college, which obviously is pretty easy to do, you can qualify for a $2,500 tax credit, right? It's really good. And, at least the first $4,000 is only going to cost you $1,500 out of your own pocket. And if your adjusted gross income is, if you're married and filing joint, less than $160,000, you qualify for the full amount. Between $160,000 and $180,000, it gradually goes away. And then after $180,000, you're not eligible. And so you certainly don't want to be in a situation where you're going to get the tax credit, but you take money out of an IRA, you have to pay taxes on that, and then no more, and then it puts you out of the eligibility to get the tax credit, right? Conversely, it would be great if you were in a situation where, hey, we could put another $1 into our 401k and save money on federal taxes, and then also get more on the tax credit as well. You're kind of double dipping in a good way on that $1. So whatever those income levels are, when you guys actually start spending money on college, understand what those are, and if you can help yourself out, it's a great way to go. Okay, so what is financial aid? Because a lot of times you'll just be on the website and the college will say, hey, 90% of our kids get financial aid. And it sounds great, but what is it actually? There's 4 pieces to the definition of financial aid. The first 2 are scholarships and grants. These are free dollars that you get. You don't have to pay them back. Sometimes kids will get some kind of scholarship in their aid package, and you didn't even apply for it, right? It wasn't based on athletics or academics or anything like that. This is simply just based on the financial need that you show at that college. The third part of financial aid is student loans. And I know that a lot of people, have heard bad stories about student loans and, things like that. In my years, I think it's fine. There is a limit. The most a kid can borrow is $5,500 as a freshman, then $6,500, $7,500, and $7,500. And so that's something in the neighborhood of $26,000, which is about $260 a month when they finally graduate from college that they have to pay off. I've never seen that $300,000 number or $400,000 number that you see on the news. That kid has that much student debt. I know that it is possible because if your kid is over 24 years old when they are going to undergrad, or if they're going on to graduate school, they're on their own. Mom and dad are off the books, and they can take out much higher student loans to get themselves, say, through medical school if that's what they wanted to do and needed to do. But certainly not for undergraduate. And then the fourth piece of financial aid is work study, which is essentially just a part-time job while the kid is at school. The nice thing about it is that it's very flexible with the kid's schedule because it's only meant for students. You have to pay federal taxes on it, but it's not part of the financial aid equation for the following year, right? Because financial aid is based on income and assets. So work study won't come back to adversely affect the financial aid package the following year in college. And the way that you qualify for any and all of this is just simply doing the FAFSA. It comes out on October 1st of your senior year in high school. You don't have to do it on October 1st. It's not a line. You don't get in line for money that way. The only deadline that you're concerned with is the actual college deadline. So every university has a different, what they call priority funding deadline. And, it could be somewhere between November 15th or even, January 31st even. And so whatever your school list shows as far as their deadline, just pick the earliest one and make sure you get the FAFSA done in time because you just want to be looked at in the first group of students. It's really easy to do. The computer, doing it online helps you avoid mistakes. It makes you answer the questions that you need to. And of course, you have to do it every year because your situation might change every year and the schools will change with you or do their best to anyway. There's another financial aid form called the profile, which can be found on College Board. That's the SAT website. Some of the more like highly selective schools like the Stanfords and Harvards ask for this form because they give out a lot of money and they want to make sure that they're giving it to the right person. And so the profile financial aid form certainly asks a lot more questions, but don't worry. If that's a form that you need to fill out, then you just do it. Of course, not everybody qualifies for financial aid. We know that, right? But if you're wondering, should I fill it out? My answer is always yes, because you have nothing to lose. This is your opportunity to say to the college, hey, if there's anything you have that might help me pay the bill, I'm interested in looking at it, right? You're not committed to taking anything. It doesn't affect your admission to the school. So it's kind of have almost nothing to lose by doing it. And in fact, some of the schools have scholarship money that they want you have to do the FAFSA in order to qualify for the scholarship money. It's kind of like you have to be eliminated from qualifying for FAFSA government money before they'll look at you to get this scholarship. So I think it could benefit you, even if you're not a financial aid candidate, to do the financial aid form. Let's see what time it is. Okay, so let's say next October for you junior students, you know, mom and dad, you sit down, you do the FAFSA, you know, it takes you half an hour and like, wow, that was really easy. That was no big deal at all. But you might also think that it was too easy. Like, where are all these other questions? Why aren't they asking me about medical bills? Why aren't they asking me about home repairs that I had to do, you know, and all these other things? If you have those kind of special circumstances going on in your life that you think would affect how much the schools give you for financial assistance, let them know, right? Sometimes it's just a one-page email. This has become so common that a lot of schools just have forms on their website that you can go right on and fill it out. And, you know, if you've got things that are going on that are kind of one-off special situations, yeah, the school's going to do what they can do to keep you in the school, right? Whether you're a freshman or you're a senior. You know, all the schools, you know, if you ask me what schools, you know, really care about, like just one statistic, because you're going to see all kinds of statistics in these college brochures. You know, one of the big ones is the 4-year graduation rate, or the 4 or 5-year graduation rate, because that one number alone, you know, it says a lot about the college. You know, it says that the kids are happy, parents are happy. You know, if the parents come into a roadblock, the school maybe does a good job in helping them out. Kids are getting the classes that they need to graduate on time. I think all those things. And so I will tell you that, you know, schools don't do things like bait and switch. Sometimes I hear that from parents. And, you know, if you run into a situation where, you know, you need some help, they'll do the best that they can to try and help you out and keep your kid in college. Okay, so quick example. Maybe there's a logical way in how you spend your money. So obviously this doesn't work for everybody, but okay, so let's say this family has like a big custodial account. It's in the kid's name. They don't do anything with it. You know, one of the ways that us as parents think automatically is, okay, this is going to hurt us for financial aid, but what we're going to do is we're going to divide it into 4 pieces and just see how long we can stretch it out over these 4 years, right? But what happens when you fill out the financial aid form every year? You know, a big chunk of it is still sitting there, right? Getting assessed at the 20% rate. What if, hey, look at what we could do. What if we just spent it all in the first year? You spend it all down. Mom and dad, you didn't spend any money on college that first year. You just saved that money in your own name as parents, where it has a much lower assessment, right? And then maybe you do qualify for financial aid sophomore, junior, and senior year because the custodial account isn't sitting there anymore in the kid's name. So there's no memory inside of the financial aid system. You know, the financial aid office isn't going to come back to you and say, hey, where did this account go? You know, and so the table gets wiped clean every single year. And so not getting financial aid the first year doesn't mean you're never going to get it. You know, so for families, maybe you have 2 kids, right? And in the middle, there's those 2 years of overlap or something like that. That's very beneficial to families as far as financial aid goes. And you might get great financial aid for those 2 years. And then maybe it goes away for the last 2 years of your younger student. Let's see. Another quick story. You know, I've helped a couple of homeless kids through the financial aid process every year and got them through college, or they got themselves through college. But it all worked out. You know, financial aid kicked in, and so I always think to myself that you know, getting a college degree is not somehow based on your family's financial status, because you know, if these kids did it, to me, I think anybody can do it. And that's kind of where financial aid kicks in, and that's where it works really well. And then on the flip side, like I said earlier, you know, if you don't qualify for financial aid and you get that number back from the school and you think to yourself it's not worth it, then okay, then you don't pay it, right? Because it's essentially like you buying anything else in this world. We are going to do some questions, but I will also throw out before we do the questions. It's a little early, but if you guys have this financial aid world in your future and you need help and you have other questions that come up in October or what have you, I'll help you do the forms. I'll answer questions, no charge. Just go ahead and shoot me off an email. My email's at the bottom, and I'll give you a hand. Any questions?
Yes, there is a question in the chat about when to do the FAFSA, and specifically, should we do the FAFSA before senior year of high school?
Well, the earliest you can do it for college is October 1st of your senior year. You can do it earlier, but it wouldn't do anything for you. It might not even be relevant to, well, it won't be relevant because your numbers are going to be different somehow when college actually comes up. There's estimators online. I think there's one on the College Board website. Yeah, I mean, you don't have to do it early.
And then there's a couple more questions just came in. So do international students who are in visa qualify for scholarships and grants?
Okay, so on the FAFSA website, which is just fafsa.gov, there's a list of the various student visas where the student can fill out the financial aid form, and then they would qualify.
Okay.
If your type of visa is not on there, then you can go to the FAFSA website, which is meant for the other group that doesn't qualify to fill out the FAFSA, and the FAFSA applies to just Washington schools, Washington public schools. And yes, you would be eligible for money. So, okay. And then on the merit side, obviously everybody is eligible for that.
Okay, and the next question is: need merit-based grant also applicable for out-of-state public colleges, private colleges, or just in-state colleges?
Need-based grants.
Well, it's need/merit, so I'm thinking, okay. Yeah, either one.
Okay, so the term merit doesn't have to do with the financial status of the family. It's just the merit of the student. So when you hear that word, that's what that is that's what that's referencing. Need-based grants, yes, out-of-state students are still eligible for those from the college. They might not be eligible for like a California state need-based grant because they're not California residents, but that doesn't mean that that's the only grant that school has to give out, right? They could have their own grant money that they give out to students from Washington, for example.
Mm-hmm. Okay, thank you. 2 more questions. Do we need to do the FAFSA if the applicant isn't an American citizen or permanent resident?
Nobody has to do the FAFSA, I guess, first of all. And then like if the student isn't a resident and doesn't fit into if they can do the FAFSA, then they can't do it to begin with.
Which may then go back to your WASFA question or answer, in that there is a Washington state version of it for undocumented students.
Yes.
And that they can fill that out. And you can find that with a Google search. And then last question, can you speak to private education loans versus federal subsidized loans?
Sure. There are private loans out there. Interest rate tends to be a little higher, and typically you have to have a parent sign off it anyway. They have to co-sign on it because, I mean, banks just don't want to loan kids a lot of money, obviously. So they are out there. They weren't as popular as they used to be, 10, 15 years ago. But I imagine that they're out there. I just don't deal with those. Essentially when a parent has to co-sign on that loan, and so now the parent's involved in the loan itself, there's probably cheaper ways to get money for that parent other than the private student loan. So if the parent's willing to take out loan money for college, there's probably a better way to go, I'm guessing.
Okay, well, thank you. This concludes our evening. We very much appreciate you attending our sessions, coming to the college conference. Please know that everything will be recorded. Well, all these sessions have been recorded and will be posted on the district website. And all of the PowerPoints will also be available on the district website. So if you were not able to go to something that you really want,